Hello, everyone. Chapter 5 is about customers and sales. These are the learning objectives. Uh, in Chapter 5, we learn how to navigate to sales transactions. And the book talks about two ways, navigation bar and using the new icon button. But in the new format, there's no navigation bar. So now you're going to use the app Sales and Get Paid. And instead of the new icon button, it's going to be the create button. We'll also talk about customer lists. And you can update the customer list before entering transactions, or you can update your customer list on the fly while entering transactions. And we'll talk about the importance of the customer list and why it's very cool. It really helps streamline entering transactions. Next, we'll talk about projects. And projects is a way that you can gather information about uh, a pet. For instance, hey, how much money are we making off of Bella? Or how much money are we making off of Remy? So projects helps you do that. Now, we're going to be going over products and services lists. And you know something about that because I think in chapter 3, we entered some services. But there are other types of uh, items, such as inventory items that you sell, okay, and non-inventory items. And we'll be discussing that a little bit. Also, in this chapter, we're going to teach you how to create a sales receipt and use this payments to deposit account. Uh, a sales receipt is really a cash sale. So in the form, if you say deposit to checking account, you're done. It goes right into the checking account. But really, that's not what happens. You collect the money, but it's not in your checking account. You have it on site. So a lot of times, people will use payments to deposit. And so you then, when you're ready, you take those payments to deposit, march it down to the bank, and make your deposit. Okay, so we'll talk about that. Also, we'll be recording invoices. Now, invoices are for credit sales, right? So um, you're going to bill your customer, and then you're going to use a receive payment to for the customer to reduce their accounts payable to you. You know, they're going to pay you, and you'll use this form to receive that payment. And again, you can use this payments to deposit account. So, it won't go directly into your checking account. It'll go into this account called payments to deposit. And then when you'll march the money down to the bank and transfer it out of payments to deposit into the bank under the checking account. Okay. And then there's accounting essentials, and you'll learn a little bit more about accounts receivable. As far as your sat nav, we're focusing in on transactions and specifically customers and sales. Okay, at the beginning, I was telling you about two ways to navigate to sales transactions. The book talks about navigation bar, but like I was saying before, there's no navigation bar in the new format. So you're going to go to the app Sales and Get Paid. Likewise, the book talks about the new icon button. Well, in the new format, it's called the create icon, and it goes to exactly the same place. They just call it create instead of new. So it's not a big deal. So on page 240, if you wanted to get to to enter a sales transaction, you would go into the navigation bar and go sales, all sales, And then these are your choices, right? You could invoice your customer, receive payments from that customer, make a sales receipt, which is the cash sale. Here they are. Now again, there is no navigation bar anymore. So instead, you're going to use sales and get paid, and you'll find the same thing. It's just a little bit different way to get to it. Okay, the new icon button and the new one, the create button in the new format are exactly the same thing. So uh, I'm assuming that by now you are in the new format. So you're going to hit create and this will pop up. And these are the lists of possible transactions that you want to record. I like this because it's so simple. If it's related to customers and sales, you go here. If it's related to your vendors who you buy from, it'd be here. It's kind of makes sense. Okay, so under customers, here we go. I'm just going to talk about a couple of these. Uh, Here in invoice, that's a credit sale. So you're going to increase your accounts receivable. And eventually, your customer is going to pay you. And so when you receive that payment, you're going to use receive payment. Okay. For a cash sale, you're going to use sales receipts. Okay. Now let's talk about the customer list. The customer list collects information about customers so we can reuse the information without re-entering. For instance, in your customer list, if you put in the customer's address, when you invoice that customer, it will populate the customer's address into that invoice. You don't have to type it in every time you invoice a customer. Likewise, you can put the credit terms. So if you're selling to your customer at 210 net 30 in the customer list, you put that, and any time that you invoice that customer, by default, the terms will be 210 net 30. Now, does that mean that you're stuck with 210 net 30? No, you can change it, but it offers it as a default, so you don't have to re-enter the same information all the time. Now, there's two ways we can update the customer list: before entering transactions and on the fly when we're entering transactions. Okay, now in the book, they talk about using the navigation bar to get to your customer list, right? Sales and customers. Well, let's go to the next slide and we'll see how we get to the customer list in the new format. In the new format, we just simply go to the customers app. There you'll open up the customer hub and just go to customers, and you're ready to enter your customers right here manually. Now, once you're there, you're just going to put in the information. The first part is the name and contact fields. And so put the name, last name, maybe a phone number, and you may want to also put in the addresses. Now, it this is a big, long series of fields, so they kind of break it up here. So if you want to quickly go to enter your address, you can go right here and click on this button here, the addresses button, and it will take you to the address fields. So you can put that in. Now, once you do that, when you invoice this customer, you don't have to enter this again. It'll pop up automatically. Now, it pops up automatically, but if you want to change something, you definitely can. But by making this the default, it's going to save you a lot of time. And also, you want to maybe uh, enter the payment term. So here, you'll use number 3, and it goes to the payments. Now, here we can say that most of the time, this customer is going to pay us by credit card. So when you put credit card there, anytime that you invoice your customer, it's going to populate credit card. Okay. That doesn't mean you can't change it. It just it depopulates that way. Also, the terms. It, I guess this customer, the terms are due on receipt. But if it was like 210 net 30, this is where you'd put it. So when you use the invoice form for this customer, that the terms will automatically populate in the invoice field under terms. Okay. Let's talk about projects. Projects is a feature that permits us to set up projects linked to customers. So basically, uh, let's say we want to know how much money we're making off of Bella. Well, we're going to make Bella a project, or we want to know how much money we're making off of Maggie. So we set up Maggie as the project. So the project name will be the pet, and the owner will uh, be the customer, right? So that's what we're doing. And this is how in the old format we would get to projects. Hit go projects, and then we could create a new project right here. But let's click the next slide for the new format. In the new format, we just go to our apps, my apps, and click on projects, and then go projects, and go to the same screen. Now, um, in your chapter, you're going to be adding Maggie as the project, and Maggie, that the pet, is going to be linked to the owner, which is the customer, Sherry Bryan, and that's going to be on page 247. You're also going to convert sub-customers, Bella and Kai, to projects, and that's on page 248. Now, a lot of times students go, man, I don't know what's going on here. I can't find it. Well, you would have made Bella and Kai here sub-customers in chapter 3. So if you did chapter 3 correctly, then it's going to work. If it doesn't, you'll have to go back to chapter 3 and do it. But anyway, that's what's happening here. In chapter 3, you made sub-customers for Bella and Kai, and now you're going to convert those sub-customers to projects. And you can use sub-customers or you can use projects. Uh, QuickBooks gives you a choice. And this author just chooses to, okay, I'm going to show you how to do sub-customers. And then later for Bella and Kai, we're going to convert those sub-customers to projects. Let's talk about product and services list. Now, you have some experience with that. In chapter 3, we entered some services. So in the book, they talk about going to sales and then products and services, right? But we know we don't have the navigation bar anymore. So how do we get there? Well, in the new format, just go under sales and get paid and kind of follow the the menu there. Okay. Now here we can add different types of items. You guys are used to the service item, but there's other items as well. Okay, there are inventory items and non-inventory items. So, we're going to be talking about those extensively in chapter 7. We're going to give you some definitions in this chapter. So, what is inventory? Well, inventory is products that you buy or sell, and you have to track the quantities of, right? So maybe you have dog food that you're going to sell. So you'll track that bag of dog food coming in and that bag of dog food going out. Non-inventory items are items that you don't have to track, but you want to put them in here. It'd be like nuts and bolts that are used in an installation. So I don't even know if we're going to do any non-inventory items. And you know about services. It's the services that you provide to customers. and you've already put those services in like chapter 3 into your product and services list. In chapter 5, you're going to be putting in a new service called custom pet food preparation. It is a service, and you're going to put it under the category pet wellness. And you sell this service to your customers. You put in the description, and then here you're going to put the rate. So you're charging $330 uh, for this custom pet food preparation, and that revenue account that it's going to hit when you sell it, that service, is going to be to account 4,200 sales. Now, one thing I want to bring to your attention is because this is a service, you're not going to have any inventory account or cost of goods sold account. But when we get to chapter 7, and we are going to be entering inventory into our product and services list, like here, you're going to have to add to this. You're going to add an inventory account, and you're going to need a cost of goods sold account, right? We buy inventory, it comes in, and when we sell inventory, the inventory goes out and it becomes cost of goods sold expense, right? So you don't have to worry about that yet, but that's what's going to happen. Just know that right now that you have a service item, you don't have inventory or cost of goods sold account. You just simply have your sales account, your revenue account, and the rate. Okay. Now, there are two main ways to record customers and sales transactions using QBO. The first one is sales receipts. And as I feel like I'm a broken record here, but if I keep saying it, you'll probably remember it. Sales receipts are when you need to record a cash sale. Also, we have invoices. Now, we use the form invoices for credit sales, sales on account. And when we do that, we'll recognize the revenue, but we're going to increase our accounts receivable. Okay. Again, sales receipts is a cash sale. How do we get to it? Well, in the book, it says new icon and then sales receipts. Well, Uh, now you just go to the create icon and go sales receipts. When you hit the create icon, it goes to exactly the same screen. It's really kind of comforting to me. When I saw that new format, I felt really good because I was really concerned about them changing it so much that you guys would get lost. But it's not too bad. Yeah, just insert create instead of new. That's all they did. No big deal. Now, when we record a sales receipt, which is a cash sale, we can deposit that money directly into the checking account, right? So if you do that, you're going to be debiting checking and crediting sales. But really, when you receive that money, you didn't go to the bank with it. You still have it at your place of business. So it makes more sense to deposit it to payments to deposit because you didn't put it in the bank. You still have it. So if you do that, then you're going to record the sale, but instead of debiting the checking account, you're going to debit payments to deposit. Okay. Then when you actually march that money physically down to the bank, and make a bank deposit, then you take it out of payments to deposit, then put it into your checking account because now it truly is in your checking account at the bank. That's how it kind of works there. Okay, let's take a look at what a um, sales receipt looks like. Again, you would go create button, sales receipt. And here it is. So you can kind of, look at this and read about this in your book. One thing I want to tell you and bring this to your attention is here, you're depositing to payments to deposit. So this means that you're going to be debiting this account payments to deposit. You're not going to be debiting your cash account, your checking account. So that's what I want you to know. Uh, Once you do this, then you have one extra step. You got to go take that payments to deposit, that money, march it down to the bank and make your bank deposit. So that's what that is. If you decided to put this to the checking account right here, you're done. Okay, so we can do it either way, but we're going to do it now with payments to deposit. All right, when you put that payments to deposit here, it's going to be debiting payments to deposit, crediting sales. It's not going to debit checking, right? Because it's really not in your checking account yet. You still have the money on hand, okay? Now, if you wanted to see that in action, go ahead and do your transaction journal for your sales receipt, and you'll see it. Debit, uh, payments to deposit, credit, sales. Now, like I say, we need to take it out of the payments to deposit, march it down to the bank, and put that money actually in our checking account at the bank. So this is what we'll do. Again, uh, instead of the new icon button, you're going to go the create icon button, go to bank deposit. And then once you're there, you put, well, what account am I depositing that money to? Well, in this case, it's the checking account. You put in the date, and then you got to tell, well, what is the deposit made of? You're going to check this, the Sherry Bryant Maggie amount, and so that's what's going to be deposited. Okay, so when you do that, you're actually moving it out of payments to deposit into your checking account, right? Because you're depositing it into your checking account, right? Debit, checking account, credit, payments to deposit. You're taking it out of your payments to deposit. You've marched it down to the bank. Now it's in the bank in your checking account. If you want to see that happening, then go to your transaction journal. And here it is: debit checking, credit uh, payments to deposit. Let's talk about the customer invoices. To do that, you just go create button and choose invoice. Now remember, invoice is a uh, credit sale. You're increasing not only your revenue, but your sales. You're increasing your accounts receivable, and then eventually your customer is going to pay you, and then you'll be using receive payments. Now, when you receive that payment and you put deposit to payments to deposit, well, then you're going to have that third step where you have to march it down to the bank, make the bank deposit. So you're taking it out of payments to deposit and putting it into your checking account. Okay. So this is how it kind of works. It's the same thing as we did for sales receipts, but this is just for invoices when you receive payments for an invoice. Okay, if you uh, receive payments using deposit to checking account, you're done, right? So basically in this scenario, you're going to invoice your customer, debit accounts receivable, credit sales, and then when you receive the payment and you put the deposit directly to your checking account, it's just debit checking account, credit accounts receivable, because the guy doesn't owe you as much anymore because he paid you. Now, if you decide to use deposit to payments to deposit, we have an extra step. Yes, we are going to invoice our customer, debit accounts receivable, credit sales. And when we receive the payment, well, our customer doesn't owe it as much anymore, right? So we're going to credit our accounts receivable and put it to payments to deposit. We're not going to put it to checking account. It's not in our bank account yet. We still have the money. So this makes more sense. You put it to payments to deposit. Now we have that extra step. We got to march down to the bank and put that money into our checking account. And when we do, we record that deposit. We're taking it out of payments to deposit and putting it into our checking account. Now, here's what a new invoice will look like. Okay, I'm just going to go create icon, right? Because that's the new thing. Then you'll see this uh, invoice. That's the wrong number. I need to fix that. I think that's the right page number there. Okay, here's your invoice. I just want to bring a couple of things to your attention here. Is that uh, because of your customer list, there's certain bits of information that are coming forward. For instance, this net 30, it populates for you automatically. If you put it in this terms in this customer list to this customer, it will flow here. Now, if you wanted to change it, you definitely can, but it's cool because it just populates and you don't have to do it. It just streamlines things. Now, when that net 30 happens, you have an invoice date, right, of 118. Well, QuickBooks will automatically determine for you, well, what's 30 days from the invoice date? It will calculate the due date for you automatically. Way cool, huh? Okay, so this invoice is for Remy, and we're billing to the customer, um, Sandy Copper, right? And what are we billing Remy for? Well, a pet wellness vet visit. And you put in the quantity. And if you have all of this in your product and services list, this rate will automatically populate for you and the amount, and you're kind of good to go. Okay, so this invoice is going to create a debit to accounts receivable and a credit to sales. Now, if you want to see that, well, go to your transaction journal. You go more actions, transaction journal, and here it is: debit, accounts receivable, credit, sales. Okay. All right. So now we have accounts receivable. Now the guy is going to pay us. So what we're going to do is receive $260 from Kai. Okay. Now, there are three ways to record a customer payment. I like this one, that's the new icon button. Of course, now it's called the create button, but it's just so simple to do. Now we don't have navigation bar here anymore. So we don't go navigation bar sales. We go to the apps and go sales and get paid. And again, we don't have a navigation bar to get to projects. We just go to the apps and choose projects. Okay. So notice that when we're receiving a payment uh, from Kai, then notice that we're we're depositing this amount to the checking account. So we're going to avoid that extra step that we would need if this would have been payments to deposit. That's fine, and that kind of makes more sense, I guess, because we need to march that money down. Of course, we're paying by credit card, so it's probably electronic. Maybe this is the best way to do it after all. But anyway, when you do that, you are done, because when you do deposited checking, you receive the payment. So it's going to increase your checking account with a debit. And of course, when Kai pays you, then he doesn't owe you as much anymore. So you're going to be crediting accounts receivable. Okay. Now, the last part of the in chapter work is reading about the accounting essentials. And it just talks about accounts receivable being the amounts that a customer owes our business. And we need to manage that. We need to make sure that we collect money on a timely basis. because if we don't, it could cause cash flow issues for the business. Uh, I can tell you that I had a friend that was young. We were in our 20s. He started a stationery store, and he would grant credit to his customers, but his customers were slow to pay him. But his bills kept coming in, but he didn't have any money to pay him because the customers were slow. Anyway, uh, you need to really get a handle on that. One way to get a handle on it is through this accounts receivable aging report. It shows us how much customers owe us and the age of the customer balance. And I don't know if you know this, but uh, the longer you don't get paid, the less likely you will not get paid. So I've done that. I've loaned people money, and if I would be more apt to get it back within the first week. But if I let it slide for 3 months, I may never get that money. Yeah, just that's human nature. So anyway, the accounts receivable aging report is really good to see what our customers owe and the age of those customers. Matter of fact, if you've got a customer that doesn't pay their bill and they've got old invoices that are 90 days past due, cut them off. You don't need them. They're going to cause your business trouble. Anyway, read about that. It's kind of interesting. Okay, well, that ends my lecture for chapter 5. So, uh, guys, study hard, and we'll see you later in cyberspace.